Hi, everyone. Welcome to today's live chat about how to finance your MBA. We have been getting a lot of questions on the forums about loans and different ways to pay for your MBA, which is a pretty expensive ordeal for most people. So today I'm going to take a lot of questions based on that. Thank you so much for joining. It's a Monday, and as you know, I'm Shovik. I am a second year student at the University of Michigan Ross School of Business, which is clear from my T-shirt. So yeah, let's just jump into it. So before taking questions, I'd like to go over a few ways that typically people finance their MBA program. So there are essentially four different ways to do it. Number one is you get a scholarship. Sweet, right? Even though it might feel like, oh, if you have a scholarship, you're not really financing, you're basically getting a free ride. But more often than not, your scholarship will be a portion of the tuition that the school charges you. Sometimes it might be 20%, it might be 40%. You might be super lucky to actually get a full ride. However, even a full ride scholarship won't really cover your living expenses. And living expenses, depending on the city that you're in, can get pretty expensive. So that's number one. Number two is if you don't have any scholarship and you have to pay for it yourself. And then what are the different ways to really pay for it? And there are three ways, I'd say, that I've seen my classmates pay for their MBA. The first one is to use their own savings. A lot of business school students have worked for 5, 6, 7 years out of undergrad before coming to business school. And especially if you have worked in North America, you may have a substantial amount of savings that you can then use for your business school tuition. We can go over the pros and cons of actually using your savings a little bit later, but that's definitely one of the legitimate ways to pay for your MBA. The second one is to actually take a loan and use your family savings to supplement for whatever deficit you have. And different loan options are different. So we're going to go over that, which is number three, taking a loan that is either signed by the university or a federal bank in the US who are basically acting as your guarantor. And like different schools can opt in to be the guarantor or provide the collaterals for your loan, or you can get friends or family members within the US, if you can't get a collateral from your school, to effectively act as your guarantor, which basically means that if you default, if you don't pay back your loans, they're going to get a massive loan themselves and they have to pay on your behalf. And finally, it's basically going to be for most international students, which is basically if you don't have a collateral and if your school is not going to guarantee your loan, then you have some private lending options, and some of the lending options are quite effective, as I'll go over. So let's just talk about some of those a little bit. By the way, if you have any questions, feel free to ask questions on the chat. Let me just put a little bit of something so that people know that we are live on the chat. Please feel free to keep asking questions. I'll get to them as soon as I finish my monologue on financing. So let's talk a little bit about what are the different options for private lending and collateral, and this is especially for international students, because for most students in North America, which is both US, Canada, and Mexico, there actually are a lot of available options to get state-sponsored loans at a very low rate. Now, for international students, it might actually be more effective if you take a loan rather than take out your savings or from your family income or from your family money. And here's why, especially if you're in a developing country, and I'm talking about countries like India, China. I mean, not so much China, because China interest rates have gone down substantially, or maybe even Brazil or other countries in, like, South America. Your money that is sitting there will probably get close to 7-8% interest, even if you are investing in the safest guaranteed return ways possible. And if you're investing in stock markets, mutual funds, and all of that stuff, you are probably making above 10% interest on that. Any loan that you take, even if it's the highest interest loan from a private lender, from, for example, like Prodigy, your loan interest is probably not going to be all that high. It's not going to be 10%. For example, I took out a pretty substantial loan from Prodigy Finance, and um, I'm paying close to 7.5% APR, which is a reasonable rate. It's higher than what federal rates are in the US, or it's higher than what I could have gotten if I had a collateral by maybe 2 percentage points. But at the same time, I really didn't want to ask other people to be collateral for me. I wasn't very comfortable in asking people that, hey, can you be my guarantor? And if I can't pay if I can't pay the loan back, it's all on you. I didn't want to get into those conversations. The other thing also is, like when a family member or when your friend acts as your guarantor, or provides collateral, then their credit scores can take a massive dip. So if they want to take a house loan or something like that, the fact that they were giving collateral for you actually may be a huge deterrent. So I didn't want to go through that as well. So I took a loan from Prodigy. I had a little bit of savings because I worked for almost 6 years before coming to business school, and I had a little bit of savings, and my family definitely volunteered to support me a little bit. But I felt that that money back in India was actually generating more interest than I would pay for savings. So then I would pay for interest for loans. So it didn't make sense to take that. It didn't make any economic sense. Especially my professor in microecon would definitely say, take the loan. The other advantage of actually taking a loan rather than using like your savings is tax benefits. You don't pay interest on the interest. You don't pay taxes on the interest that you pay back. So that's pretty huge, because if I plan to pay off my loan within maybe 3, 4, 5 years out of business school, and one good way of saving taxes in that time is to actually pay as much interest as I possibly can so that I can save taxes on those. And taxes can get pretty high in the US depending on where you live. I will be in Seattle after business school, and I will pay about 25% taxes on what I make. So it will be a pretty good opportunity to save some of that. So I would encourage you to take a loan and not use your savings. However, if you are in the US, your savings is probably not making a lot of money unless you're diligently investing in the stock market, or like things like index funds, mutual funds, where your interest rates for your loan may not be as high. And in that case, using your savings might be a good idea. There are people in the US who have lived here forever who make 1% or 2% of their savings, and that rate is definitely going to be lower than what you will pay for interest. So figure out that math, do the math for yourself, and see where you'll be paying effectively the least amount of money, and that's going to be your financing goal. Having said that, there are a few other sneaky ways where you can actually end up paying for your tuition, and which a lot of which I didn't know, which is why I wanted to do this video, because there are a lot of different ways where you can get your money paid without you having to pay anything. So I'll go over some of that. I'm getting some questions, so let's take a few questions. Prashant asks, are there any options where the colleges take the guarantee for the students to get collateral-free loans? Absolutely, there are. A lot of schools do this. I'd be happy to say that most schools do this. Unfortunately, there are a few schools that don't, but some of that is changing. For example, when I was applying to Ross, which was, I can't believe it was like 1.5 years back, I applied in round 1 for the 2018 intake for the class of 2020, which was way back in 2017. Ross actually did not provide collaterals, and so I had to take a loan from Prodigy. However, now Ross actually does provide collateral for some private lenders, so you'll have no problems getting a lower rate than what I got. So good on you. Lots of colleges do this, Prashant, so you need to check the website. Off the top of my head, Harvard, Stanford, Wharton, they definitely do that. Booth does it, Tuck does it, Ross does it. I think the only school that I know that don't is Stern, but please don't quote me on that. Just check their website. Things may have changed since the time that I have applied. Okay, Varun asks, hey Shavik, I filed an application with Prodigy as well, and they are charging me 9.25% interest, 9.9% APR, which I feel is on the higher side, even for Prodigy. Anyone would negotiate this. That sounds higher, Varun. I'm not so sure. What I found some benefits out of was redoing your application with Prodigy, changing some of the variables. So I would often change things like my family savings and my personal savings. And sometimes that would have a pretty strong impact on the interest rates that I was going to get. The second thing is your interest rate gets higher closer to your admission date. So the earlier you do it, the earlier the best rates you get. I don't think you can negotiate with Prodigy. You can call and check. The other way to look at it is to also check what other applicants have gotten, what interest rate and APR rates other applicants are paying, and see if you're on the same ballpark or if you're paying higher. But also do it. Just check with Ross. Ross has other financing opportunities that will give you probably a lower rate and also cover full cost of tuition. As far as I know, Prodigy only covers up to 80%, and there are options within Ross which you don't need a collateral, and they cover 100% of your cost of living and the tuition. So, which I think is a better deal. It's always great to have a little bit of cushion, and let me tell you why. When I was calculating my business school total cost of being here plus the tuition, I thought, hey, I mean, in all likelihood, I'll probably make 25, 30 grand during my summer internship, regardless of wherever I get it. I was being optimistic. However, one thing that I didn't check was I interned at Apple in California. So even though I was making a fair bit of money, I was paying a lot of it in taxes. And I was getting taxed at 35%. So I'm going to get some of that money back when I file for my returns. But I did not get that money while I was there. So make sure you account for that. To be safe, I would assume that you get zero money in the summer. Whatever money you get in the summer, use that for other expenses, like going back to your home country or traveling. There'll always be those things that suck money out of you. So to keep a cushion is always helpful. Some schools also offer collateral-free loans. Can you talk a little bit about that? Yeah, absolutely. We touched upon that a little bit. So basically how it works is your school has negotiated a deal with either a federal bank or a private lending partner. More often than not, the private lending partner is going to be Discover. And maybe there are a few others which have popped up. Maybe one of them is Sallie Mae. What they will do is they have negotiated these loans for their international students where you can get a collateral-free loan with an interest rate that ranges from 6.5 to about 10%, anywhere in between that. So I would explore all those options and take the loan where you have the lowest APR. But APR is just one of the variables. The other variable is your payment terms and your payment schedule. Check if they have any early repayment fees. Often, by the way, lenders are not supposed to charge you for paying your interest early. For example, my Prodigy loan is for 20 years, but I'm definitely not. I don't want to take 20 years to pay my loans. I want to pay it off 4 or 5 years, save interest on that. Make sure you don't have to pay anything to be able to pay off your loan early. Ideally, you shouldn't have to, but just check the fine print. The other variable that I would say is check the amount of time that they're letting you borrow the money for, and also check when you have to first start paying back. So Prodigy, for example, gives me, I think, 9 months after I graduate before I have to start paying them. So that sort of, if I don't have a job, thankfully I do. But if I didn't, that sort of gives me the relief. But because I don't have to pay, I think my monthly repayment is close to like $800 or $900. I don't have to pay that money as soon as I graduate, even though I don't have a job. So make sure you know the payment terms details as well. What are the options for UK? Again, it's very school to school dependent. You can still take a loan out of Prodigy Finance or Discover. Prodigy Finance has like 100 business schools all over the world, so you can still get a pretty good rate from them. But at the same time, you should also check your school options. Often schools have, again, like I mentioned, often schools have negotiated a deal with private lenders or even federal lenders. So they may have a sweet deal for you that you should go and check either on the school website or after you got admitted, talk to the admissions people, and they will probably get you in touch with financial aid. All right, so we'll check with Meredith. Meredith is, by the way, a very kind admission director at Ross. If you are applying to Ross, definitely reach out to her. I'm going to know cosigner position as well. Does Ross also help with that besides collateral-free loan? They do. So they recently have started some non-collateral lending options. So definitely get in touch with the financial aid office. Meredith should be able to set you right up. How important is your GMAT score to get a scholarship collateral-free loans from the college? Good question. Not for collateral-free loans. So if you're a business school, by the way, these are all schools, not colleges. So make sure you sort of tweak the way you speak about them. It's like it's a nitpick, but it is what it is. So your ability or your eligibility to get a collateral-free loan doesn't really depend on your GMAT score, man. It doesn't depend on your profile. If you got admitted to the school, you are eligible for all the loans that the school has, regardless of your GMAT score, your demographic. That doesn't matter. The only thing that matters is two things. Number one is, are you an international student? Because sometimes international students will have different opportunities, will have different procedures for loans. The other thing is your scholarship kind of does matter, not just your GMAT score, but your overall application. So this is how scholarships work, okay? So your school will give you a scholarship if they think you will leave that school for a better school or for a different school, right? That's why they give you the scholarship, to get you to stay. And often there are a lot of successful examples of people not getting scholarship, but being able to negotiate scholarships, right? Feel free to check GMAT Club on that. I think BB just made a post on successful scholarship stories. Check the business school application, and there are a lot of those examples. If you have a great profile, it helps getting a scholarship. The other thing that might help getting a scholarship is if you have an admission from a very similar or peer or a competitive school, and you can tell the school that, hey, look, I mean, you're not giving me any money. Let's say so Yale didn't give you any money, and you got into, let's say, Duke. And like, look, Yale, you didn't give me any money, but I got a considerable amount of money from Duke. I want to come to Yale, and Duke is a pure school. Duke is no slouch. I want to come to Yale, but make that happen. Help me come to Yale, because I don't want to, take a $50,000 pay cut. So they make sure of that. So let's see. Can you tell about scholarship in IMs? No, I have no clue. I'm sorry. I didn't really apply to IMs. But as far as I know, they don't have a lot of scholarship options. They might, but I've never heard of that. So now I wanted to quickly chat a little bit about some of the other options of getting money out of school. So one of the best options is actually going through a dual degree program. And before you scoff at this idea, just hear me out. So University of Michigan, for example, that's my benchmark, because that's the university I go to, and that's also where I have the most information about. But I am pretty certain that most schools with big universities would offer similar things. So at University of Michigan, you're doing the full-time MBA, right? A lot of people do another dual degree with the full-time MBA. And the dual degree could be maybe a degree in public policy, maybe a degree in the School of Information, which, by the way, is kick-ass. It teaches you a lot of data analytics. It really helps you get tech jobs. So it's a great opportunity to check it out, not just from Michigan, but from some other universities as well. So you can do an MSI degree, which is a master's in the School of Information. Or you can also do ERB in Michigan, which is an environmental science master's. And for each of these dual degree option, by the way, you're taking classes together in your second year and your first year, right? So your graduation can happen at the same time. Even if you're a dual degree student, you can finish everything within 2 years. Or you can take just a little bit more. It can take maybe 2 years and 1 semester, or 2 years and 1 quarter. However, if you are in a dual degree program, your chances of getting scholarships are higher. And not only your chances of getting scholarships are higher, but also you can apply for GSI positions, which is the graduate student instructor, which basically means you can teach a class, or you can help a professor teach another class, grade papers, and all of that stuff. Not only that gives you a stipend, which is not a lot, but it helps. It helps buying groceries, like $20, $15, $20 an hour. But being in GSI, in MSI, or any other programs will cover your entire tuition, including your tuition at Ross, which is incredible. Not only you're making a stipend, but your full tuition is paid for. I wish I knew about this. If I did, I would definitely go for MSI, but I didn't know. And now that I got the taste of not being unemployed, I don't want to spend more time in school, and I want to go out there and start working as soon as I can. But if I didn't know, I would probably take that. Let's take a few more questions here. We have about 5 to 10 minutes left. Let's take a few questions. Filed an application. Oh, this is, we have done this before. Yeah, so some schools have, okay, so I'm getting a question on some schools have different lenders. How do you select between them? Okay, so yeah, that's tricky because different lenders would have different opportunities, different APRs. So try to get that framework for yourself. So the variables that I would put within that framework is A, what's the APR? That's the most important, right? What's the interest rate? B, how much time is it allowing you to pay your loan back? And C, when do you have to start paying the money? So those three things would seal the deal for you. And however, don't be lazy with this. Make sure you check as much as possible with different lending options, because you don't want to miss out on a better opportunity. And think about that. A 1% APR difference between two lending options can actually mean tens of thousands of dollars, right? So make sure you've checked the fine print and you're taking the best loan that is available for you. So I would definitely try to do that. So we don't have a lot of questions right now, but we got some really good ones. As I mentioned, check the forum. We have a lot of threads about successful scholarship negotiation, different ways to finance. Feel free to reach out if you want any of your questions answered on financing your MBA. This was great. I'm going to come back on Wednesday, and we will do a reflective session on whether the MBA was worth it. Quick spoiler, it really was. But we're going to take a little bit more of a nuanced approach on what makes it worth it, what makes it not worth it. So feel free to check back on Wednesday, same time, same place. And feel free to visit the forums, ask questions. We are starting a project where we will do a lot of new videos every week with our GMAT and MBA partners. So keep subscribed to our YouTube channel, where we will start posting even more videos, more than thrice a week that we are doing right now. So feel free to check that out. We will post a public schedule very, very soon. So until then, I'll see you guys on Wednesday. Thank you so much for joining.